Bitcoin today. As you can see, Bitcoin is down 18% in the last 7 days at 60.4K. We're also going to talk about the S&P 500 and about how all these stocks are going down as well. Alongside of the crypto market, everything is dumping. So we're going to cover this. Remember, I'm not a financial advisor. None of this is financial advice, but let's go over this. So let's start with Bitcoin. As you can see, we're at 60.4K. And yeah, we're down a lot, 18% in the last week, which is a lot of dumping. And as you can see, everything else has been following Bitcoin. The whole entire crypto market is down bad right now. Like I mentioned before, the extreme fear here for the fear and greed index is extremely high at 13. So that's pretty high. And not to mention all the stocks that are going down. So everything's doing pretty bad right now inside of the market. And also shout out to all the members of the channel. A member actually asked if I can go over SPY, the S&P 500. So we're going to cover this. And if you guys want me to cover things for you specifically, go ahead and become a member of the channel. But we're going to talk about this because, both Bitcoin and the stock market going down at the same time, this doesn't happen all the time. When it does, it's usually because it's a serious pullback that's happening on both ends. So that's kind of how we're seeing it with both of them. Now, first covering Bitcoin, as you can see here, Bitcoin has created a new low. It was a smaller, a small low. It was at 59K before we got all the way down to 60K. So yeah, it went all the way down to 59K, almost touched 58K, and it has since then recovered just a little bit. And if you look over here at the weekly chart, you can see more selling pressure is going to start coming in right now. That selling pressure is going to speed up here. This is the MACD. We're going to start seeing it speed up. Why? Because we are in the process of building bullish divergence. Bullish divergence is pretty much where you see lower lows on your chart and higher lows on your MACD. And the reason why this is so important is because by the time this is done, we would have created a lot more lower lows. So what we're creating right now is a new lower low. So that's what we're creating right now on the MACD here for our bullish divergence. We're going to create a new lower low, and then it's eventually going to break out by the end of the year. And that's why I keep saying around October to November of this year is going to be when the bear market probably ends and then starts to turn into the bull market again. All right. And, this is just kind of looking at the past performance and how things have happened in the past and seeing how the market is reacting right now with these different technical indicators and patterns. So that's kind of how I'm looking at it right now with Bitcoin. So yeah, we should be creating a new lower low, and that's why I keep saying 50K. You already know my stance on that if you guys have seen my videos before. But yeah, we're looking for 50K, and we might have a push below 50K as well. We're also looking for 40K. We have a little bit of areas in between there as well, but anywhere from 50 to 40K is where we're looking right now for that next lower low on Bitcoin. So that's what I'm looking for on Bitcoin right there. And again, this is the weekly chart. And looking at the daily chart here, we're pretty oversold here on the percent hour training exhaustion. So I'm looking for some type of recovery here, right? I'm looking for some type of short-term recovery followed by like another pullback right here. So I don't know. I'm waiting. Maybe we'll see something pushing up to like 64K and then a even further push downwards, or maybe it'll push down further before it has that rebound, right? And that's kind of what we're waiting for right now. So yeah, we're seeing that selling pressure here building up on the MACD here, and we might see some buying pressure coming in. So we might see something like this, unless we're going to get a little bit more selling pressure, and then we can kind of zoom a little bit further in to see that on the 4-hour chart. Now we're still creating the bullish divergence on the 4-hour chart. So this is the MACD on the 4-hour chart, which is actually pretty interesting because if you look at this diagram here for the bullish divergence, you see lower lows on the chart, higher lows on the MACD. It looks exactly like this higher low area down here. It looks exactly like that. And when you look at it, it looks like literally the exact same. So that's what I'm saying. Let this buying pressure wear itself out right now. Let the buying pressure wear itself out. And then once that selling pressure comes in, that's the next lower low on the charts and the next higher low on the MACD, right? Just let that buying pressure wear itself out. And then once it does, let that selling pressure come in. And this will slowly but surely make its way up. But as it's doing that, the price is still going to be going down, creating those new lower lows, because that's how it works with bullish divergence. So that's what we're doing right now. We're creating those higher lows on the MACD here while simultaneously creating the lower lows on the chart, which will then push us down to 50K. So that's really the method behind it. That's the technicals behind it. And over here, we have a few things coming out. The inflation rate year over year, June 10th, that's going to be coming out, core inflation rate. So we're going to see that in the month over month inflation rate as well. So we're going to see that. We're going to see the PPI on the 11th as well. So that's going to be interesting, and that's going to definitely move the markets. I don't know by how much, but it is going to move the markets. And still on the 4-hour chart, we're still oversold here on the percent on trending exhaustion. So if we stay here for an extended period of time, we're going to see that price continue to grind down, which kind of confirms what we're looking at here with the MACD. It kind of confirms the bullish divergence scenario where we start to see those lower lows on our charts. All right. So again, 50K. If it goes below there, we're looking anywhere to 40K, right? From 50K to 40K. Now, we got Bitcoin covered. I want to talk about the SPY, the S&P 500, and the SPY represents the S&P 500. And shout out to the member of the channel that recommended this, usually just Twitter. But I gotta say, that was a huge dump that we had yesterday, right? That was a huge dump. I was kind of busy yesterday, so I couldn't really trade it. So I was like, oh man, but it was a huge dump. People were making lots and lots and lots of money. And I was looking at some contracts that I wanted to buy on some puts that I want to buy that were like 0 day to expiration. I would have literally got like 500% off of it, but it would have been super risky. But that's to say, like, there's a lot of people that are shorting the market now because the market has been pumping for so long, right? We've been in a straight uptrend literally since not March, but since April. Since April of this year, we've been in an uptrend. So April and May and now June. So literally 2 months straight, we just went crazy, crazy, crazy. And then we just kept pushing. And for the first week of June, we were pushing as well. So for 2 months straight, we were literally pushing. So that's actually pretty big. That means that we have to come back and that we have to create new support areas. So then we can start building back up to go higher. All right. So we're going to see a pullback and probably another push higher. But that pullback has to happen first. As you can see right here, the red line, that is a 50-day moving average. And the white line is the 200-day moving average. And the 50-day currently is sitting at $710. And then the 200-day is sitting at $680. So, we could go down to the 50-day, tap that and continue up, or we could go down to the 200-day, possibly go a little bit below it like how we did here, and then go right back above it and keep running up. Me personally, I say we come down to the 50-day and then we have that continuation upwards. I say the 50-day, but we'll have to see. We'll have to see. And if we do break the 50-day, we might just stop right here at this resistance. And that's when I can bring in all this. And you'll probably be like, what is this? That's because I day trade and I have not taken anything off of here. And I literally day trade the SPY every single day. So I'm looking at these levels every single day. And what I can tell you is that there's some real momentum behind this push up, but you want to be extremely careful. You got to be extremely careful. There's a lot of momentum on that push, but you got to be careful because as they push it down, $710 from 737, that's kind of, it's not that big of a drop, but it's still a drop, right? It's still going to be significant. And if it breaks that and goes to 680, now you're looking at a lot more selling pressure. So I would say watch out for that as we pull back down there. And then we have 690 for that Fibonacci support. So maybe if we stop before the 200-day, well, actually at that point, the 200-day would probably already be at the Fibonacci at 690. So yeah, it would probably already be there. So I would just watch out for the 50-day moving average and the 200-day moving average, and then that you should be good with the SPY, right? And that's just for the short term. And as for the long term, let's take off all this. As for the long term here, this is the weekly chart. We're going to get this pullback here regardless. And again, this pullback, there's no telling how big it'll be. I think it might be like a halfway pullback, kind of like how I did here, because as you can see, we had a huge breakout, and that was only after we had that major pullback, right? We had the pullback and then a huge breakout, and then we came down like that. Kind of the same way that we're doing it again. Come down here. Now we're having a huge breakout, and we're probably going to make our way down here and then have a continuation upwards. That's kind of how I'm looking at it, because that's how it's done it the last 3 times. So it's done it here. That's one. It's done it here. That's 2. It's done it back here. That's 3. So I'm just waiting to see if it does that same thing again, because if it does, then that can be a super bullish thing for us. And again, I know this is crazy. I probably should have been took all these lines off. I know it looks crazy, but you know, it's just how you got to do it whenever you're day trading. I have all these different levels and I'm looking at it on a 1 minute chart. So it doesn't look crazy at all on a 1 minute chart at all. But yeah, like I was saying before, we're getting that selling pressure in on the MACD. We're going to start seeing this thing curving over here and coming downwards. This is on the weekly chart. So prepare for some selling pressure unless we get like an extended amount of buying like back here. But we'll have to see if it does something like that. I don't think it's going to. I think we're going to get the pullback. And then on the weekly chart, we have the 200-day at 680, and then we have the 50-day at 670. So I think somewhere around here, around $680, I think that could be a good support range for us to be looking at if we are to have like a big pullback. So that 200-day moving average still is where I would be watching for. And I know it's kind of the same thing, but you know, it's just a different point on the chart, right? The other one was the 1 day time frame. This is the 1 week. And now this is the 1 month time frame. Now in the 1 month, we are completely overbought, like completely overbought. And we have been for the longest time. I mean, if you look back here, this is 2013 all the way up to 2015. You can see how it's overbought, and then it just dumps going into 2016, and then it just comes back going into 2017, right? So we are at a point right now where we're overbought in the same type of ranges. So if we had a pullback, is it going to be a hard pullback or a small one? This is the monthly chart. So this is looking at going by the end of 2026 and the end of 2027. And that's actually what the member of the channel wanted to know. Like, what's going to happen by the end of 2026, 2027 for the SPY. That's why I say, go ahead and become a member of the channel, guys. It's definitely worth it. But what I would say here, I like going by the MACD and the percent R trend exhaustion together. The percent R trend exhaustion is showing that we are overbought for the 1 month time frame. And then when you look at, in the 1 month time frame is looking at decades, it's looking at several years, all right? And then like the next 2 years. So, and then when you look at the MACD, you're seeing that we also have the same divergence, but we're having bearish divergence. So we're just going to keep creating these higher highs until we finally complete our bearish divergence and then dump. And the whole time we're doing that, we're also creating these lower highs on the MACD. So you can see that it's almost completed. It's almost completed here. So as this gets completed, you can see we've been building this divergence since June 1st of 2023. So since June, well, really July, since July of 2023, we've been building bearish divergence. So we've been pushing bullish since 2023. That's what that means. And if you look back here, I've been covering this for a while. I've been tracking this for a while. I mean, I haven't really been covering stocks, which I should. If people are really interested, I'll cover stocks more. But we've really been rallying here since 2023. And if you look, that's where we bottomed out here on this channel. We bottomed out here on 2023 and 2023, and then we just started to go crazy, and we've been going crazy since then. And we haven't had a real pullback since 2023. So if we haven't had a real pullback since then, what do you think happens now? We're about to have that real pullback, and it's going to be pulling back quite a bit because we've, as you can see here, we've broken past this area. We've broken past our channel that we've been in here since 2018. So there's a possibility that as we pull back, maybe we pull back, we hit like $680 or something, right, at the 200-day moving average. And then we just have a huge amount of buying pressure, just bringing this buy up, 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 up into a huge bubble going into 2027, going into 2028, seeing the SPY getting up to like $1,000 by 2030. I think that is the more probable scenario. We just have a pullback and then it just keeps grinding up higher and higher and higher and higher until like 2030, and then we like dump hard. And that's kind of how I'm seeing it. And the reason why I say it like that is because, yes, we have bearish divergence here, right? So yes, we are going to have a nice little pullback. We'll see how much that nice pullback is going to be. That maybe that pullback brings us even further down, right? Maybe I'm wrong and we come down to the 50-day on the monthly chart. And this is the monthly chart, remember. If we come down to the 50-day moving average on the monthly chart, now you better really prepare for some lows, right? Because that's around like $530 here. And obviously around that time, it would probably be like 580 around this level here. So I feel like we're gonna come back into this channel again. I think we're gonna come back into this channel. We're gonna slap something down here. Maybe stop at 680, try to do something. If that doesn't work, come all the way down to like 580, and then make our ways up here inside of this channel, and then just keep doing this until we finally get to like 2030 at $1,000 inside of SPY and inside of the S&P 500. I think that's kind of how it's going. But anyways, we have bearish divergence, so we're definitely going to get a huge pullback here soon inside of SPY. So I would be very, very cautious. But yeah, that's how I see this happening, right? So we'll see how this plays out. But yeah, let me know what you guys think about this. It's definitely getting crazy out here. Again, stocks have been dumping just as hard as crypto. So, don't feel like you're alone. If you're in the crypto market, people in stocks are getting dumped on just as hard. Well, actually, no, crypto is getting dumped on harder. I got to be honest. Crypto is getting dumped on way harder than stocks. It just looks bad inside of stocks because it doesn't move much, right? So this is how it is. Go ahead and hit the like button, subscribe. Remember, I'm not a financial advisor. None of this is financial advice. Leave a comment in the comment section. Let me know what you guys think. As always, I'll be back with another video.